Hey everyone, welcome back to the channel. I'm your friendly money guide, and today we're tackling one of the most common questions I get. I only have $100 or $1,000 to invest right now. What should I actually do with it in 2026? If you're new here, don't worry. We're keeping this super simple. No fancy jargon, just clear steps you can take today. Whether you're in your 20s, 30s, or beyond, this video is for you. Stick around because by the end, you'll have a complete beginner plan that actually works. Let's dive in. First things first, why bother investing even small amounts in 2026? Because time is your superpower. Money in the stock market has historically grown about 10% per year on average over the long term. That's not a guarantee, but it's what the S&P 500 has done for decades. Let me show you what compound interest looks like. If you invest $1,000 today and it grows at that average rate, in 30 years, it could be worth over $17,000 without adding another penny. Your $100 could turn into $1,700. That's the magic. Inflation is still around 2 to 3% a year, so cash sitting in a regular savings account is actually losing buying power. Investing puts your money to work so it can beat inflation and build real wealth. Before we invest a single dollar, quick safety check. Do you have an emergency fund? Aim for $1,000 to $2,000 in a high-yield savings account first. That way you won't have to sell investments if life throws a curveball. Once that's covered, we're ready to go. Step 1. Open the right account. You want a brokerage that's free, beginner-friendly, and lets you buy fractional shares. My top picks for 2026 are Fidelity, Charles Schwab, or Vanguard. All three have zero commissions, excellent apps, and you can start with as little as $1. Fidelity is especially great because they have zero expense ratio funds and top-notch education tools. Sign up takes 10 minutes online, link your bank, and you're set. Pro tip: if you qualify, open a Roth IRA instead of a regular brokerage. In 2026, you can contribute up to $7,500 if you're under 50 or $8,600 if you're 50 plus. The money grows tax-free, and you can withdraw it penalty-free in retirement. Single filers under $153,000 income and joint filers under $242,000 get the full amount. Check your eligibility. It's a game changer. Step 2. What should you actually buy with your $100 or $1,000? Keep it dead simple. Buy broad index funds or ETFs that own hundreds or thousands of companies. No need to pick individual stocks. That's way riskier for beginners. Here are the two easiest winners in 2026. VOO, Vanguard S&P 500 ETF. It tracks the 500 biggest US companies. Expense ratio, just 0.03%. Super cheap. VTI, Vanguard Total Stock Market ETF. This one owns basically every US stock, big and small, even broader diversification. With $100, you can buy a little slice of either one, thanks to fractional shares. With $1,000, you can split it 50-50 between VOO and VTI for extra balance. Why these? They've delivered strong long-term returns. They're diversified so one bad company won't sink you, and the fees are tiny, less than $1 a year on a $1,000 investment. Step 3. How to actually invest it. Don't try to time the market. Use dollar-cost averaging. Invest your $100 or $1,000 right away, then set up automatic transfers of whatever you can afford each month, even $25. This way, you buy more shares when prices dip and less when they're high. Set it and forget it. The market will go up and down. That's normal. In 2026, experts are expecting around 10 to 12% average returns. But remember, past performance isn't a promise. Long-term is the key. Hold for 10 plus years and let compounding do the heavy lifting. What should you avoid? Don't day trade or chase hot tips. 90% of beginners lose money that way. Skip individual stocks and crypto for now. They're too volatile when you're starting small. Never pay high fees. Stick to low-cost index funds. And never ignore anyone promising get rich quick. Real wealth is built steadily. Here's your exact 2026 action plan. Build or top off your $1,000 emergency fund. Open a Fidelity, Schwab, or Vanguard account today. If eligible, choose a Roth IRA. Invest your first $100 or $1,000 into VOO or VTI. Set up automatic monthly investments. Check in once a quarter. Don't obsess daily. That's it. You just started investing like a pro. Drop a comment below. Are you starting with $100, $1,000, or somewhere in between? Which step will you tackle first? I read every single one and reply when I can. If you found this helpful, hit that like button, subscribe, and turn on notifications so you don't miss our next beginner-friendly money video. We've got more coming on budgeting, debt payoff, and building your first portfolio. Thanks for watching. You've got this. I'll see you in the next one. Stay smart with your money.